everybody, this is Caroline Alizan, a graduate student of the Grok Trade Mentoring Program. It is Tuesday, February 22nd of 2011, and we are looking at the Q's daily chart. And wow, what a day on the markets today. Listen to this. Nasdaq and S&P 500 down over 2%, close to 3%, and the Q's down 2.89%. That's a significant drop, and look at this huge red candlestick. Wow, it's amazing, and it's all due to increasing oil prices as well as some problems in Libya. So watch it really carefully, but also remember that you always play what you see, not what you think and what others think. So that's a pretty nice thought here to remember. But anyways, let's do some technical analysis here on our pretty chart. So as you can see, I have so many different trend lines drawn in here, and what I want you to pay close attention to is that rising wedge formation inside that uptrend that I have here between these two purple trend lines. So we've had a rising wedge forming on our daily chart, which is a bearish formation, and from then on also we were looking for a breakout through the high base that we formed on our chart last week. And actually we wanted to see that last candlestick that we see here on our chart to be in that tight trading range at the top of the rally, and that's what happened. That's what we saw, and we are in a rising wedge formation with a high base at the top of the rally, which is indicating that we are bearish. And check this out, we had this huge drop today, and what else do we see? We opened in a bearish territory. We opened below the 8 moving average, which is indicating that we are bearish. We are below it, and we opened below it and held that low for the rest of the day, closing the day lower, even below that next major area of support right here at the 57.18 mark. So the 8 moving average at this point in time is acting as a significant area of resistance right now. Support once broken becomes resistance, so that's what happened. So pay close attention to it tomorrow, and it's sitting at the 58.38 mark. So pay close attention to that 58.38 mark as well as that 57.18 mark, which is this area of support down below. And what else do we need to pay close attention to? Is the low of today, which is at the 56.94 mark. So once we break through it and continue to the downside, the next stop would be at that next area of support right here on our way down at the 56.37 mark, and then we're getting closer and closer to that next moving average, which is here in red. I'm not sure if you're able to see it, but it's sitting right at the 56.25 mark, so pay close attention to that as well. And then the next major one would be at this lower area of support where you see this big black trend line right here, and it's at about 55.99. So pay close attention to all major areas of support and resistance. And check this out, what do we see on the MACD here? It's crossed over, and we are going south on according to the MACD with a little negative tick. So we are confirming that bearish move today, and we are also confirming it with the increase in volume. It was a significant increase in volume today. We are above the average, which confirms that bearish move. So again, pay really close attention to all major areas of support and resistance that I showed you here today, and also look for confirmation with the MACD. So have a wonderful day and trade smart.